going DeFi, greatest in the world, and they finally about to see why. What you know about XRD? I'm smart money, I ain't never on a decline. What you know about NFTs? It's not just Ace, when you finally gonna realize you need scalability, need more utility, then you better call on these guys. I'm going radical, I'm going Radix, I'm going radical, I'm going Radix. Hyperspeed DeFi, never on a decline, building the future, I feel like a savage.
Hello and welcome. I am Piers, CEO of RDX Works, a core developer of the decentralized finance protocol Radix, a public ledger entirely focused on bringing DeFi into the mainstream. This is our podcast, The DeFi Download, a show about decentralized finance and all things crypto, where we dive into the details of the projects, assets and services that are powering the DeFi revolution. Today, I have Omar Yehia. Omar, thank you so much for being on the show.
Thanks, Omar.
So let's start with yourself, because I think that you are one of the people that I've spoken to in the space that sort of thinks more deeply about the strategy of like making sure these things are successful, as well as the errors that we make sometimes in building these primitives. So I'm curious to learn a little bit more about your background.
Sure. So my background, by training, actually, I was in the sort of science, applied maths field for a long time. In undergraduate, I did a lot of research in like rocketry, rocket science, and then I pivoted into doing photonics, how you design waveguides, things like that, things that are particularly useful for like solar applications, thermal photovoltaics, heat capture, things like that. And this was me just like being almost like a child in a laboratory, and people would sort of entertain me and let me use their stuff as long as I wouldn't break it. And then that's when I got really curious about sort of the maths behind it. And I studied under one person in particular who really inspired. He was a physicist by training, but he was extremely mathematically minded, in the sense that the way in which he viewed the world was very simple, funny enough. And I just admired that so much, because he could reason about anything sort of from first principles. And that's when the first time I really admired this sort of approach to life, is almost a reductionist approach, that you can just think of, complicated phenomena arise from very simple rules. Right. So that's when I got into maths, and then I did applied maths for a long time. And then at some point, I thought I would be in sort of in academia forever, and then that lasted about 2 months until I realized there was something wrong. And the thing that was wrong there, interesting enough, was a fundamental misalignment of incentives, I thought, in the way academia was structured, and more interestingly, in the way research was done. And I spent a lot of time being on the, funny enough, on the proposal, managing grants side of science. Typically, at least in the United States, graduate students are sort of heavily involved in government-funded research. In fact, the majority of research that's funded at American universities comes from either Department of Energy, Department of Defense, or things of that nature. And so I got to see firsthand sort of how the sausage is made, and I sort of never wanted to have sausage again, to be honest.
This is an interesting thing that I've heard lots of people say, right? And I have a thesis that I haven't tested with anyone. I'm just going to try with you now, right? Which is like, the misalignment of incentives is similar to the problem that you get in communism. So in communism, the alignment of incentives often revolve around status, and you have status games because you don't have a arbiter like the market. You don't have a way in which the outcome of something is able to be quantitatively measured in some way, because you don't have supply and demand, market driven forces going, yes, this is what we actually want, we're going to buy it. Instead, you have this sub-status game where you are constantly vying for visibility and prestige, and your actions are judged based on your commitment to a higher purpose In the case of communism, it's the ability for the state to succeed. In the world of academia, it obviously depends on which particular branch of academia, but it all feels quite similar, and it ends up creating backstabbing. It ends up creating a lot of like really strange interactions between holding credit or not holding credit. And now obviously there are massive differences as well, but it feels like the behaviors that sort of were visible in what happened in sort of like communist Russia, in the bureaucracy, ignoring like the atrocities that were done by people like Stalin and stuff like that at the mid-level, and what you can sometimes see in academia, there seems to be some weird corollaries. And like, yeah, I'm interested to get your thoughts.
I think the analogy is actually spot on. I think the spirit is indeed the same. It ultimately leads to a misallocation of resources. That is the final outcome. And funny enough, if you do some introspection, you will see that there is sort of this inherent structure, at least in Western academia, where you have to go through certain motions and have to do certain things. And there are certain timelines by which you have to be tenured. And there's something that happens if you are not tenured at a major university, for example. Life becomes very difficult. Things of that nature. And you have to ask yourself, okay, well, how does the tenure process work? Who are the sort of illustrious arbiters of who gets to stay at the university? And then what happens post-tenure? Post-tenure, you sort of have a job for life. Barring that you do something sort of extraordinarily disastrous, you essentially it's effectively not possible to get fired from academia.
Right.
What does that remind you of? Well, I mean, the government bureaucracy is very much the same.
Right.
So you're not. I don't think it's far-fetched, the analogy that you're drawing. And I think ultimately it is because there is no clear market for the output.
Yep.
The inputs are regulated by means other than the sort of invisible hand. You get these very interesting mini bubbles in academia where people sort of get interested for not necessarily any practical or monetary reasons in a particular topic, and you have decades of research in that topic for structural reasons related to, well, this was a niche topic that was done by one person, and the only 5 people in the world that know how to referee this topic are his academic descendants, and then they sort of go off and they start their own research labs, and they produce a generation of students who are only interested in this problem, not because they have some sort of objective view as to why this problem is interesting, but because their advisor just told them you have to work on this problem. And then sometimes we get interesting results. The majority of times you get just this sort of meandering path where things that are tangentially interesting are pursued, and then you continue to sort of fork off until 20 years down the line you realize, why on earth have we been studying this? And more importantly, why have we been funding this with taxpayer money, right? When it comes from the government funding, this is taxpayers' money. And so there's almost no feedback whatsoever.
Right.
In fact, I'd be surprised if you ever see like any direct debate over some of these topics publicly. Typically, they're just considered, because, funny enough, they're so small relative to the other sort of squandering of resources that's done at the government level, that they typically are sort of at the bottom of the list of people's worries. But you forget that science, or one forgets that science drives technology, and technology is the only reason that humanity has sort of prospered as much as possible. So even if it's a small amount, I think we should really pay attention to it.
Yeah, but I mean, this is the thing that I think is intrinsically difficult to work out, right? Like if you take someone like Leslie Lamport and his research in the sort of the 1980s, late 1970s, early 1980s, and how fundamentally, like how foundational that is to so much of sort of consensus theory today, and like what people have been able to leap off from that, the work he did that was academic in academic institutions rather than commercial. And like some of it was commercialized, but like a lot of it just stayed as academic papers for a very long time. Similar for what you see with some of the maths that's behind zero knowledge proofs. Like that was, that was worked out.
Yeah, Silvio Micali in the early 80s and co.
In the early 80s, right? So, and then it took a very long time long time in crypto years, not long time in like sort of like academic years, for for the world to catch up. And, you could look back then and say, this is a meandering path. Like, why do we need to be able to prove that we know something without actually showing the thing that we know? Like, why is that ever going to be useful? Or like with consensus algorithms, we have mainframes. Why do we need to understand how to do Byzantine fault tolerant consensus algorithms in massively distributed systems? We don't. Like, we can just use simple round robin or whatever. Like, it doesn't matter. So how, and this is a question that I'm sure we're not going to be able to go to answer a question really on, apart from just the philosophy of it, is like, I do wonder whether or not crypto is going to have to get better at squaring this circle, because I think that the ability for technology to move forwards some of it's going to rely on stuff that we won't see payouts for in 5 years or 10 years, but may see in the long term. So how do you create incentives that align around that period of time that may be for the good of everyone rather than the good of like one particular company?
Sure. First, let me just comment on what you said before. The fact that useful output came out of that 30-year academic process, that's not what we're contesting. What we're contesting is whether we could have gotten there much faster, right? And a good example of this was, funny enough, the Manhattan Project, the American nuclear program.
Right.
If you look at the theory that was developed for nuclear physics, for atomic fission, for the theory of radiation, studies around visible material in general, in 4 years, you had an absolute giant leap in the understanding of humanity in terms of how atoms work. In fact, we went from the 1930s, in which the framework for atomic theory was very phenomenological. We just started, like Paul Dirac, just started to get a quantitative understanding of atomic structure. And then in the 1940s and 1950s, you had an absolute revolution. And this was 4 years of directed effort. So it's not a question of whether you can necessarily, I think over a sufficiently long time period, this idea of ergodicity, you will you'll sort of discover everything and span every path. It just takes enough, if you take enough steps. The question is, we need to get there faster. Life is a finite thing. And so I would hope that technological progress sort of improves my life today as opposed to somebody else's life in 100 years. Now, when it comes to, funny enough, because you mentioned even ZK proofs, Eli Sasson, who's one of the founders of Starkware, talks about how in the last 4 years, there has been more advancements in cryptography than there was in the past 20 because of this private market thing called distributed ledgers and blockchains and whatnot. So even then we see a sudden acceleration in a topic that was, like you said, has been studied for a very long time. In the last 4 years, there have been an enormous amount of effort and output because of a private market thing.
Yeah. But private market's very good. I feel like private market is very good at optimization.
It's also very good at identifying problems.
Is it very good at identifying problems?
Yeah,
That's true
it's really the fundamental issue of the sort of private versus the central planning. So the sort of a capitalist type approach versus a central planning type approach it's not really the solution, but rather the problem. Are we really optimizing for the right thing?
Right. And it's interesting that actually goes into many areas of business. Like the one of the things that I found most interesting about working with law firms, for example, is the most important thing is what's the question.
Precisely.
Right.
Precisely.
It's not who the lawyer is or what the who the law firm is. It's being really specific about what it is that you want to know in the first place. And this feels like a similar thing, but sometimes I suppose.
Absolutely. Even if you look at the definition of economics, right? It's the study of allocation of scarce resources, right? It's the problem of allocation. It's not we have these resources and let's sort of look into them and pontificate about the nature of these resources. It's more like, how do we allocate them? So, yeah.
So you started in sort of like academia and mathematics, and then you sort of move more towards sort of market. So like, how did the jump into crypto happen?
I think there's this funny story that it's 100% reality, but it's funny now because so many people have experienced similar things that it's almost become cliche. But in 2016, the Egyptian central bank, which is Egypt is the nation which I hail from, they rugged me, right? They did a proper rug pull. No, I swear. They locked up capital denominated in US dollars. And then overnight they devalued by like 60 or 70% overnight. Right. And you could only withdraw like $50 worth every day. And there were some ways in which, if you thought about it, you sort of got away with it. But at any rate, so I got like rugged. So I was like, okay, this is like the 21st century. We've, man has been to the moon and back. We figured out, the germ theory of disease. We figured out, a lot of things. How is it that we haven't figured out this thing of money? And that's actually the first time in my life that I seriously thought about like the technological proposition of money. I always thought of money as more of something that we sort of inherited from antiquity, and we sort of understood how it worked. And then at the periphery, there were interesting things, but at the core, the sort of the problem of money was relatively understood. That day, I realized, boy, was I wrong, right? And that was a lack of due diligence on my end, because unfortunately these cycles typically happen, once or twice or three times per generation.
A lack of due diligence sounds like you're being too hard on yourself. That sounds like you're being too so much of what we do as humans is follow patterns based on what other people do. It's impossible to act as a human in everyday society if you have to think about the immensity of the complexity of everything we do and rely on. It's a failure of state, not a failure of you.
And yet it is still up to me as an individual to constantly examine my hypotheses and my assumptions, especially the ones that matter. If the majority of my wealth is stored in the form of a paper currency, every once in a while it would be judicious and maybe even prudent to evaluate the prospect of storing that. Now, if I have a meal, for example, once every while, I might not be necessarily interested in the origin of that meal because it's sort of not necessary to my sort of regular sustenance or the way in which I operate. But if the majority of which I'm optimizing for, let's say, and that's the sort of gathering of an enormous amount of paper currency, only to realize that you're storing in the wrong vehicle, then that's a problem. So I think constantly examining hypotheses, and then particularly related to ideas that have never really been tested in the wild, and you sort of just inherited from somebody else's thinking, which is as we've seen recently, it's a very, very dangerous thing.
Right. And
it repeats since the dawn of time. There have been a lot of very nice books written about this. Devil Takes the Hindmost, The Price of Time. These are wonderful books, and it talks about the financial repercussions of what happens when people do not constantly re-examine their hypotheses and their assumptions.
So in 2016 this happens, and then that immediately leads you down the rabbit hole of Bitcoin and decentralized systems, or does it start off?
It started off with the problem of currency. I was like, okay, like you check the exchange rate of the Egyptian pound versus the US dollar. The Egyptian pound depreciated against the dollar, but that must necessarily mean that the dollar appreciated against the Egyptian pound. So why is it that the dollar was a better store of value relative to the Egyptian pound rather? So I was like, okay. So then I started to think about the theory of money, theory of banking, theory of exchange rates. And I started to read a lot in the sort of Austrian school because they examine these things from first principles.
Right.
And then I realized, okay, well, hold on, you're just sort of like, it's a game of hot potato. You're sort of, these cycles happen and there's a structural delay between them when these currencies are devalued. But if you just look at the purchasing power of the dollar or of any fiat currency since the dawn of time, it's just been down only, right? So it's a matter of just like jumping from one sinking ship to another. Just one is sort of more underwater than the other. So then I was like, okay, so how do we think about this from first principle? Why I can get on a ship that's not sinking at all? And that's when, of course, the theory of hard money, or the theory of private money in general, which led to the theory of hard money. but you can have public hard money in general. And that's when I got into, it was really Bitcoin. Bitcoin was, at the time, the only thing that had a decent amount of literature. So that's sort of when I read a lot about that. And then a week later, literally, the person who introduced me to Bitcoin, I was talking to him, and he then introduced me to Ethereum. And that's when things got interesting, because my only issue with Bitcoin is it never satisfied my curiosity, because once you had it, then what? Right? Once you have $1 in your bank account, I could use it I could send some to you. I could use it to pay my rent. I could use it to buy a house. These sort of things. I can have a credit account that's sort of issued against my transactional history, which is what essentially a credit score is. Bitcoin sort of afforded none of that, or at least natively. I could imagine how you could do this, but not natively. And then the same person was like, "Have you heard about Ethereum?" I was like, "Oh, well, that's interesting." That's when I read the Ethereum. I think the Ethereum yellow paper at the time. And then I was like, okay, some serious thought is going into this. And that's when I really got into it.
So from the Ethereum yellow paper, like what was the journey then into investing?
This was around, so I was at Princeton at the time, and it was hard to miss the ICO era just because a lot of people there were in some way involved. And it was Princeton's right next to New York. So it was just very, very hard. It was sort of like you had to like be deliberately blind to sort of miss it. And so that's when, of course, one had to get a quick crash course in venture investing. And what we ultimately learned later is the 1934 and 1940 Acts, Securities Acts in the United States as well. So that sort of came later. You had to think about.
Everyone was like, "Oh, the Howey test."
The Howey test. Yeah. And I was like, "Who's this fella Howey?"
Suddenly, freaking orange grows.
Orange grows, and I was like, "What are people talking about?" But at any rate, that, and then sort of we got into that, and then later, after I finished, I joined a fund, and then I sort of took it from there. That was sort of my foray into professional, quote unquote, investing.
Right. And what do you know now that you didn't realize then? What do you think is the sort of like, since the 2017 sort of era of crypto to the now era of crypto, what do you think are the bigger, like harder meta lessons that you've learned in that time?
Something that should have been obvious in hindsight is that most people do not care about decentralization. It is not a parameter or a variable that they optimize for at all. It is, in many ways, it is acts like insurance. And insurance only matters when something goes wrong.
Right.
But if you have volcano insurance and you don't live near volcanoes and you've never seen a volcano in your life, when somebody tries to sell you additional premiums on volcano insurance, you are typically averse to that. So that is the fundamental problem: is that there's this sort of turkey problem where life is okay, and you said there's a march of progress until that one event, which is unfortunately can lead to ruin, and one could have prevented that by having insurance, in this case decentralization, but it's too little and too late. And if you were a turkey, your line of thinking would be, well, I've lived my entire life and I've never needed it. Why would I need it now? Which is the traditional fallacy. So
I think that I think that's a really good point. I never really thought about it like that. But I always say that there's a Faustian pact in the Web 2, which is privacy for convenience, right? So you give up your privacy in exchange for convenience. I think there is also a Faustian pact in Web 3 and decentralized finance right now, which is centralization for convenience.
Precisely. That's exactly it.
Right. Because like, who wants to deal with self-custody? Who wants to deal with smart contract interactions?
Even at the most basic level, from a distributed ledger, the idea of having agents that have to do consensus and thinking about distributed systems and then decentralized systems, you literally forego usability for decentralization. That is literally like the trade-off. I mean, there are theorems in computer science that tell us that that's the exact trade-off.
FLP impossibility or something.
Or the CAP theorem. Or, the things derived from downstream from the CAP theorem, yeah. And so we have to...
All comes down to CAP theorem eventually.
Everything, there's no phenomenon in crypto that's not 2 degrees removed from the CAP theorem. It's the equivalent of like the second law of thermodynamics in crypto. the problem is that the objective function, or really the utility of almost everyone, happens to not be conditioned on this idea that there are these regularly occurring events, right? That occur that do lead to ruin, and they don't happen once every 100 years. They actually typically happen once every 10 years, and we have a pretty robust historical picture of this. This is no longer a matter of like intention. It's not a matter of if, it's a matter of when. And so the fact that we continue as a populace, we fact to continue to like condition based on other things, is probably what will almost guarantee that these sort of things will continue to happen. I mean, if it's in modern financial history, let's call it 18th century or even 17th century England, for example, the majority of financial crises have had very, very similar origins. These are not technological issues. They're typically issues of trust. Okay,
right?
They really are.
Yep.
Almost at the heart of every financial crisis is trust misplaced. And here we finally have a method in which you can have agents in a system coordinate in a way that's asymptotically trustless. Means that you can essentially you can guarantee an infinitesimally small amount of trust that's needed in the system but with some trade-offs, and yet we're still not excited about it.
Right. Yeah. Like I think there's also the inherent human thing that if it hasn't happened to me, or if I haven't directly experienced it, then it doesn't matter. It doesn't matter as much as like the compromises I am willing to make now are fine because it will be okay because I haven't ever directly experienced as the result of those compromises.
That, sir, is just a very simple description of innumeracy, just when it comes to the laws of statistics. The fact that it hasn't happened to me means that I don't have to worry about it. I just can't help you.
So, like, what do you take? Like, for me, I'm the FTX thing, the Three Arrows thing, the Celsius thing. They're all like terrible stories, but they actually make me more hopeful about the ability for the industry to concentrate on the right things.
What was at the heart of all of these tragedies? Fundamentally misplaced trust.
Fundamentally misplaced trust, exactly. Like you gather, you have this incredible tool for creating trust minimized systems, and then you go, yeah, but it's difficult to deal with. So what we're going to do is we're just going to give it to that man over there that we trust because he's got a public profile and because he says, that you can trust him.
But isn't it ironic that the industry which champions this idea of trustlessness had one of the greatest failures of trust in modern era, and there is the person who presided over the liquidation of Enron and other sort of famous incidents is the same person presiding over the current liquidation, and he himself has said, "I've never seen such a thing." So isn't that ironic?
Yes. Yeah, hugely ironic. Like there's a lot of talk that has happened in crypto that I've sort of seen where people like complain about insiders in banking, right? They say, they complain about the fact that insiders unfairly enriching themselves, but when it comes to the opportunity for them to do that directly, they're quite all right with it. Again, it's not the fact that there are insiders enriching themselves, it's the fact it's not them that are able to do it. So, like, what do you take away from? What do you see as the most important next steps for crypto, and what are you investing in that is directly helping make sure that happens?
So, the first and I think most important principle is to be able to build systems that are decentralized by default. Like no additional effort or no indoctrination of the agents or no incentives are needed to necessarily add to a base level of decentralization. Sort of, it has to start off in a way that's, or at least very quickly become decentralized, so that one is not able to subjugate the system based, and then end up with these sort of misplaced trust situations or scenarios. However, at the core of that, and this is where technology happens, and this is where advancements in cryptography happen and help, is that it cannot be an insurmountable decline in usability and composability in order for you to attain this base level of decentralization. So you cannot say, I've designed the system that is extremely secure, extremely decentralized, but it is god-awful to use. Okay, that is a useless system. Mm-hmm. So the trade-off between having a principle in design, it's decentralization sort of embedded at the base layer, but then also having enough improvements in the technology so that it is usable from day one, or nearly usable from day one, is I think the driving principle. And my hypothesis is that every single primitive that ends up being a sort of winner of a vertical category in crypto will have that feature. Uniswap, in many ways, and a reason for its success is because it actually exhibits those features. Mm-hmm. The Uniswap front end, of course, is just a website that somebody is hosting, but the actual smart contract code, you cannot really change it.
Right.
Anybody can access it. Anybody can list the market. Yep. You can't really influence the liquidity almost whatsoever. So at the core of it, the reason why some of these primitives have worked, I think, because they exhibit those, and more importantly, it is really, really easy to use. Mm. Then the trade-offs are very clear. Mm. You will get, for low liquidity, you'll get slippage. For high liquidity, you won't get much slippage. There is this prospect of MEV, and that's sort of inherent to the structure of Ethereum. But in this idea that you have an invariant which is used to price the assets, or the relative price of the assets, obviously, it is very, very easy to use. You just put in a number, you click swap, and that's it. Or from the CLI, it's almost as simple. So we see the two features that right there.
But there's a third feature there as well, I think, which is like robust elegance, I think is also part of it. Like you talked about your professor, and one of the key things that his key principle was that the complex phenomenon can be described in simple ways. You think of John Conway's Game of Life or something like that. Yeah, of course. Right. Yeah. So, and I think Uniswap exhibits this in an incredibly instructive way as well, which is that in creating these financial primitives around, what you're talking about, like decentralization. I forget what was your second one. It was decentralization as your first primitive, and then your second primitive was
it has to be usable. It has to be very.
Has to be usable. Yeah. So decentralization, usability, and then the usability. I think there is a concept of robust elegance here as well. If you think about how Aave works, if you think about how Uniswap works, and then you think about how they then interact with each other, and then you think about how those building blocks on their own are very simple, but when you start being able to compose them together and construct them, you can actually create a huge amount of complexity out of these sort of like simple building blocks. I feel like that's a pattern that's going to have to repeat as well. Like, the robustness of a system tends to be the robustness of its constituent pieces, and I think that with DeFi more than anything else, you can create these systems. If you have composability as an underlying principle of the system, you can now create these building blocks which on their own are not very sophisticated, but when you can bring several of them together, you can suddenly create things that are competing with, traditional finance for liquidity, for their ability to, create efficient capital allocation, all of this stuff. So like, yeah, that was more you inspired me to a thought than a question.
It's precisely right. The primitives have to be robust, and I think the usability is an implicit function of what you called elegant simplicity or whatnot. So a robustness, elegant. Yeah, it's the same. That's exactly that's where it comes from. Like a primitive that is like very convoluted and difficult to understand means there's the surface area for damage is very large. And more importantly, for your ability to like interrogate that system, it becomes more difficult.
Mm-hmm. Mm-hmm. Yeah, it's interesting. I'm not sure. I personally don't put ease of use and robust elegance necessarily together. I think you can have a easy to use system that is in it, how it operates, not necessarily robustly elegant. I think you can have two systems that have exactly the same user features, but you can have two entirely different ways of implementing them. I think often one of the things that when looking at consensus and consensus systems, one of the reasons that I loved what Dan designed for Radix, for example, was it wasn't just that it operated in a way that gave you a new set of properties of the system. It's the way in which it achieved those properties was also robustly elegant. Like it was a few things doing very large numbers of functions rather than very large numbers of things doing very large numbers of functions.
One I would call robust, the other I would not necessarily call robust. And again, the robustness comes from the fact that you have simple primitives that in combination can generate very rich phenomenon. But when you come to interrogate them, they themselves are simple. So the robustness that you're describing, follows from that, I think. Mm-hmm. And you can see that in, again, you can get a very complex system to do very complex behavior. That is not necessarily interesting because it's a Rube Goldberg machine already, right? So just having an output that's complex is not necessarily interesting. It's getting a simple system that you can run diagnostics on. You can check every parameter. I mean, we're talking about money here. We're talking about using code that's going to control money. So being able to have coverage, like essentially all possible scenarios, which is sort of mathematically ideal. Being able to do so, you can't do that with a very complex mathematical framework. You can only do that with a very simple mathematical framework.
Right. Which is, like why the Radix engine is a finite state machine. Like, we were like, for the four fundamental core principles of the idea of objects that have value and the way in which those objects interact with each other, you want to be able to have a finite surface that you can reason about the functionality of the system. And, being able to separate out that from the definition of objects that have value and the definition of the logic around those objects, those were big things for us that felt like, I mean, we talk about this internally as like suddenly discovering like some fundamental laws of physics, but it's like, it feels like that once you've been able to describe what you want to be fully describable as a system, and then what you want to be able to be as flexible as possible for people's inspiration. Like you can then create these like elegantly robust systems that still allow rich phenomena, as you say. So I'm going down the Radix rabbit hole here, but it's definitely like talks to a lot of the design principles that we sort of like brought as we were building. On the front of like your investing philosophy and how C Squared invest, I think there's many ways of investing, but there's two like potentially conflicting things here, right? One is like investing in the future that you want to exist and investing in the future that you think is going to be most profitable. How much of a Venn diagram do you think those two things are?
This idea of wanting a particular outcome, it doesn't really exist in our vocabulary as capital allocators. It does as individuals. We all have our biases. We all have our personalities. We're not machines. But when you put on your capital allocator hats, you need to move away from any of these biases and be very Bayesian in the way in which you update your information and your outlook on the world. I don't decide what the future is, and I can't even predict it. But what I can do is certainly I can prepare. And that preparation is a function of my current observations and my very short-sighted postulates about the future. But this is something that we struggle with every day to make sure that we are never over-indexing or never sort of believing something or adding something to our set of conditions that is a function of what we want as opposed to as a function of what the feedback that we're receiving from the market, from things that are outside of crypto, what they're telling us. That is important, we think. And we're very suspicious of prediction in general. We think it is extremely difficult to predict anything on a long enough time horizon with any sort of robustness. So what instead we can do is that we look at the set of all possibilities, or what we can imagine are possibilities, and try and build a portfolio that's robust enough. And that is our way of sort of preparing for a future that is extremely uncertain and that it's very difficult for us to say anything quantitative about.
Mm-hmm. I mean, there must be some investments that come along that are against the underlying philosophy of what you want the future to be, though, right? Like, we're talking about this sort of like idea of decentralization, like the Faustian pact of centralization and security. Like the there are going to continue to be ways, regardless of the FTX hacks and scandals and all this kind of stuff, in which people will centralize their trust around individuals and institutions rather than around smart contracts. And there are going to continue to be opportunities for a lot of money to be made as a result of that. So are your capital allocation decisions purely based on what is likely to return the most capital, or are they also based on, like, there has to be some filter here? Well, maybe there doesn't, but it feels like there would be some filter here of going, I don't want to invest in this, not because I don't think it's going to make money, but because I think it tilts the industry in the wrong direction, away from what the industry should be. Because I feel like we're still in this stage, and I'm putting a lot of my own bias here, and feel free to debate with any of it, but I feel like we're still in this stage where all of our actions do have an outsized impact on what the future ends up looking like. We only have certain number of scandals before, I think we only have a certain number of scandals before, you get regulated out of existence, or you get legislated out of existence, or whatever. So yeah.
To be very clear, we have, as a fund, we have a fiduciary duty to our investors to make them money. Yes. Based on our mandates that we both agree, that the funds and the investors have agreed to. That is the only thing that constrains our reasoning, is our ability to return capital, to preserve our investors' capital, and to return reasonable return based on the investment strategy that's sort of outlined in the fund. In the design of the vehicle, we have certain theses. And the investors in the fund agree with these theses. And the covenant is to prudently deploy so as to try and capture some value based on this growing market. But the word should does not exist in our vocabulary. We do not have a claim as to what the future should be, and we do not have a dog in that fight as a capital allocator. Mm-hmm. As individuals, we have to live in this world that's going to be created. So we will always have these biases. But as professional allocators, our job is to keep those biases at bay and to fulfill our duty to our investors.
Yeah. Yeah, it's such an interesting it's such an interesting thing to have to deal with, and like I think, you know, we certainly don't have. We're certainly not going to be jumping into sort of like an ESG debate at this point, but like I think that there is this wider concept of what the actions of a market does to the wider stakeholders of a system, and I think there's definitely.
I can assure you those calculations are something are ones that we do. This sort of these nonlinear effects is if this set of primitives or these set of primitives are built. What could they lead to? We think of that as well, but we have to separate what I will call the philanthropic mentality from the allocation mentality. They may be related. There is a future in which, let's say, for example, let's just abstract it away. There is a future in which if everybody on planet Earth is extremely fit and healthy and lacks any sort of chronic disease, the economic output of the world will probably be higher than it is today. So there is that future, okay? But I can't necessarily make an investment decision just based on purely, wouldn't it be nice if everybody was healthy and everybody was fit? So there's a very fine line, but they are related concepts. So I completely agree with your point. But again, as professionals, we have a duty.
Yeah, no, for sure, absolutely, and like. I don't think there's any way of doing it apart from making that duty clear and measurable. Like I'm not saying that it's a bad way of. I'm not saying there's a better way of doing things. I'm just like I think it's an interesting philosophical concept or construct. I think it's been such an interesting conversation with you, Omar, as always. Thank you so much for sort of like coming on the show. If people want to if there are companies out there who are interested in sort of like getting invested by you guys, like how should they get in touch and how should they learn more about your fund?
Absolutely, just a simple Google search. You find me at 0x OMARYEHIA on Twitter. We're pretty accessible. So
thank you very much, Omar. Have a wonderful day, and looking forward to speaking to you again soon.
Thanks for having me. Cheers.
You better call on these guys. I'm going radical. I'm going Radix. I'm going radical. I'm going Radix. Hyperspeed DeFi, never on a decline. Building the future, I feel like a savage.